Well, how you doing? It's already the third quarter of 2023. That's amazing to think how fast time is flying. It just seems like I was just, at the end of 2022 and telling you what I expected for this year. And so far, it hasn't been far off. Markets were up most of the first half of the year, and then, of course, this last quarter was a negative quarter, and I kind of expected it. And if you have been paying attention, I've been pretty active, moving stuff around and anticipating what was coming, and feel really good about what we own and where we are, and our diversification. But it's been really difficult this year. It has been really strange because when markets drop, usually bond yields go down because people are piling into the safe investments, which then causes the price of bonds to go up. But the exact opposite has been happening. So it's been kind of a illogical year as far as figuring out, because it started out with a very narrow part of the market going up, and then that part of the market started to come back a little bit while the rest of the market started to catch up and kind of flatten it back out to where we had a little gain. And then now in this last couple of months of the quarter, we kind of went down. So I'm anticipating the market will be higher by the end of the year than it is currently. So I made some pretty good moves over the last week or so, and we are well diversified, and we still have plenty of cash, although markets, as I'm speaking to you, have given a little bit of a drop. But I want to talk to you about a couple of things I think that maybe can help you to put into your mind some things to ease the stress of investing. One, I always say, if you're waiting for the skies to clear to invest, you're never going to make any money, because that really never happens. There is always something going on in the world that's uncomfortable, whether it be politics, or whether it be, wars, or whether it be some economic problem or whatever. There's always problems. That's just inherent with human beings. So you really have to invest when there's rain and clouds and, things just a little disruptive. That's how you make money. You can't make money when things are easy and everything's just puddling along for you. So the other thing I wanted to talk to you about is time in the market versus timing the market. I have a piece from Putnam, and if you would like to see the piece, I'll be glad to email it to you. All you got to do is request it. But what it basically shows is from 2006 to 2021. Now we're talking 15 years, 5,400 days. Okay, that's a long time. If you stayed in the market, you would have had a return of 10.6% on your money annualized. It's really good, strong numbers. But for those that wanted to time the market, if you were out just 10 biggest days of the 5,400, then your return goes down to like just over 5%. You lose half your return on 10 days out of 5,400. And then if you look further onto this piece, it shows you other days. Look at 20 days. If you were out of the market just the top 20 days of the 5,400, your return was like 1.5%. And if you were out the 30 biggest days, you had a negative return. It's just impossible to try to time the market, because it happens in spurts. It doesn't happen linear. So bottom line is, that piece, that should be something you think about all the time. That's why when people ask me, Mike, how come you don't sell everything when you think the market's going to go down? Because you can't time it. And if you get out and then the market goes up and you're sitting out, then what do you do? So you always have to remain invested, but you have to have a strategy to deal with that. So bottom line is, I just want you to hear these things. Markets are, kind of in turmoil right now. But like I said, I anticipate we'll end the year a little bit higher. So if I don't talk to you between now and then, I want you to have a great Thanksgiving, a Merry Christmas, Happy New Year, and I will see you on the backside.